Good morning. My name is Miguel Gonzalez, and I'm a retirement specialist with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about the difference between value and growth investing. Looking at their recent track records doesn't do much to settle the debate. Over the past decade, as a whole, value stocks have not performed as well as growth stocks. But looking at a larger body of cumulative data reaching as far back as 1926, this has not always been the case. Let's dive in a little deeper. Investing for value, investors look for bargains. That is, the attempt to find stocks that are trading below the value of the companies they represent. If they consider a stock to be underpriced, it's an opportunity to buy. If they consider it overpriced, it's an opportunity to sell. Once they purchase a stock, value investors seek to ride the price upward as the security returns to its fair market price, selling it when this price objective is reached. Most value investors use detailed analysis to identify stocks that may be overvalued. They will examine the company's balance sheet, financial statement, and cash flow statements to get a clear picture of its assets, liabilities, revenues, and expenses. One of the key tools value investors use is financial ratios. For example, to determine a company's book value, a value analyst will subtract the company's liabilities from its assets. This book value can then be divided by the number of outstanding shares to determine the book value per share, a ratio that would then be compared with the book value per share of other companies in the same industry, or to the overall market. Let's talk about investing for growth. Growth investors are using today's information to identify tomorrow's strongest stocks. They're looking for winners, stocks of companies within industries that are expected to experience substantial growth. They seek companies in a position to generate revenues or earnings greater than what the market expects. When growth investors find a promising stock, they buy it, even if it has already experienced a rapid price appreciation, in the hope that its price will continue to rise as the company grows and attracts more investors. Where value investors use analysis, growth investors use criteria. Growth investors are more concerned about whether a company is exhibiting behavior that would suggest it will be one of tomorrow's leaders. They're less focused on the value of the underlying company. For example, growth investors may favor companies with a sustainable competitive advantage that are expected to experience rapid revenue growth, that are effective at containing costs, and that have experienced management team in place. Value and growth investing are opposing strategies. A stock priced by a value investor might be considered worthless by a growth investor, and vice versa. Which is right? A close review of your personal situation can determine which strategy may be right for you. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon, and don't forget to subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.